impacted by everything that's happening in the Middle East is the chemical space. Ajay Joshi, who's chemical industry expert, joins us this morning to contextualize this. Ajay, how much of a headwind from a China perspective and tailwind from an India perspective does this do for the chemical industry? What is it that the impact is likely to be, especially on the Indian industry from a raw material perspective? I'm trying to get a sense.
Yeah, good morning. See, it is a scary situation because crude and natural gas, ammonia, methanol, they are the prerequisite of our chemical sector, not only ours, but also China. Let me give you a quick brief on China. China is also impacted severely because 45% of their crude oil comes from Iran. So China again is impacted. I'm hearing their refineries are operating at reduced operating rate, 30 to 40% production cut is there. Many Chinese suppliers are not quoting or taking fresh orders from Indian importers for agrochemical raw material or pharma raw material. So situation in China is also grim. But coming to India now, India is a country where 87% of our crude oil is imported. 50 to 55% of our methanol is imported. Most of our ammonia is imported for fertilizer segment and chemical segment. So for us, we are seeing very increased cost pressure on chemical companies. Even the situation gets normalized, let's say 1 month down the line, but the raw material Indian companies are purchasing today are at a very high cost. Products are having premium like 120, 150%. So today they buy at a higher cost the raw materials, and 1 month down the line situation gets normalized. They have to sell their end product at a lower cost. So it's not a good situation for Indian chemical companies also.
So, Ajay, as of now, can the situation worsen further? And in your view, as of date, are markets correctly pricing in how much this situation could escalate for chemicals and feedstock supply chains?
Actually, I don't think markets have they have taken into account the gravity of the situation. Uh, because orders are also not flowing. It's not like raw material is not available, second orders are not flowing. So there's a huge backlog of orders, backlog of import orders from Middle East, from Saudi, Dubai, Kuwait, Iran, everywhere. Second, the shipping situation is also very scary. The freight rates have increased 4 to 5x. Maersk, one of the largest shipping company, they have suspended all trades from Middle East to and from Middle East or transit from Middle East. So it's a very scary situation because there is going to be huge backlog of orders also, even though situation normalizes. So I think Indian chemical companies will see huge margin pressure for the current quarter for next 2 3 months, and markets have not yet taken into account the gravity of the situation. As on today also, I was talking to a couple of people in Saudi. We do feel that crude oil prices will again once go beyond $90 per barrel within 1 or 2 days.
Oh, that could be big. Talk to us about the worst hit within that chemical basket, Ajay. You have a good grip of how this plays out. What is it that will be impacted the most, both in terms of input supply chain perspective as well as output? Give us a sense of that.
See, of course, fertilizer companies, for example, Chambal Fertilizers, they import their LNG from Qatar, severely impacted. Deepak Fertilizers, GNFC. Then we have companies which use benzene as a raw material, NOCIL, Aarti Industries. All these companies are severely impacted because some of these product prices have increased by 20-25% in the last 24 hours. So that's why I again and again am saying that today we are buying raw materials at a very higher price. And 1 month down the line, when everything goes back to normal, you will have to sell your end product at a cheaper price. So the margin pressure is going to be detrimental. Then again, companies, I think all across companies, this is for, like I said, fertilizer companies, Chambal, GNFC, Rashtriya Chemical and Fertilizer, then rubber chemical producer NOCIL, then companies like Aarti Industries, Lakshmi Organics, Jubilant Ingrevia, which are import dependent for all these raw materials. So basically, all the chemical companies that derive their raw materials from crude oil, natural gas, methanol, or ammonia, they are severely impacted. There are some companies which are immune because they derive their raw material from mineral-based products like fluorochemical companies, fluoropolymer companies. They are a bit immune in current situation.
So just, talking about resolution and options over here, Ajay, is China in a much worse state than India then currently?
Or artificially, yes. So from China, you know what I'm hearing? They are creating an artificial shortage by not offering any petrochemical or chemical to Indian companies. We talked with several Indian companies, mid to small size, as well as several Indian distributors import from China. We got to know that China is not offering them any material as of now. Rather, they are hoarding the material, which they can later dump at a higher price. They are squeezing the Indian consumers. So China, yes, they are also in the equally bad position, but they do have the strategic results. Plus, uh, just now, we got the news that China is still getting the oil from Iran via Strait of Hormuz. So China is creating this artificial shortage to squeeze Indian consumers. They are holding on. They are building their own inventory.
Okay. And what does this do from a global standpoint in terms of pricing? We've seen chemical companies being under the pump for the last maybe 2 to 3 years because pricing hasn't come through the way one would expect. Every time we speak to a chemical company, they're saying we're 2 quarters out in terms of that pricing re-rating coming through. How does that move, Ajay? Give us a sense.
See, globally, Europe is in the worst position. So European companies like BASF, they are in the worst position. First, they have been getting impacted with the Russia-Ukraine situation, Russia cutting off their gas supply. They diverted to Middle East. And now from Middle East also, their supplies are nil. They are not able to get the crude or natural gas. So Europe is the worst hit. We are again seeing many shutdowns. We are also seeing many companies up for asset sales. Then coming to the Asia side, India being a net importer, we are also impacted. So this is going to be a long-lasting effect on Indian companies. This will also affect our agrochemical business this year because fertilizer production is not happening, which will result in delayed Kharif sowing season. Delayed Kharif sowing season or reduced Kharif sowing season mean that reduced agrochemical demand. So there are going to be a lot of cascading effects, so which we will watch and we will keep on updating.
All right. Ajay, anything on the industry side which will likely suffer as a result of everything that's playing out? What will be the excuse me? What will be the key risks from an industry standpoint, from an output standpoint, which gets affected?
I think right now supply chain, as on today, while we talk, many fertilizer companies in India have shut down multiple units, whether it is Hindustan Urvarak or Rashtriya Chemical or IFCO, they have shut down multiple units. So it will take some time to restart those units. So I think the farm segment, the food security, I think that is one segment that will get hit somehow, the food value chain, not only in India, but all across the globe, because trades are also at halt. Shipping is not happening. Second, the fertilizer situation is grim all across the globe, which directly affects the food value chain.
Okay, Ajay, great to have you on the show and share with us all that insight and analysis on how this is going to impact the Indian chemical players. Good speaking with you. Tell you what, we're holding okay right now for the market. Let's take a very quick break. We'll address all the other news on the other side. And yes, there's a new listing as well, isn't it there?
Well, yes, there is. Let's pull out that stock. Sedimac is the new listing that we've seen on bourses today. The stock was up 15% on listing itself, currently sitting at around 17.5% higher, of course, versus the IPO price. So seeing a decent kind of move on that one. But what we'll do is slip in a very short break, come back, continue conversations. Stay with us.